What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kwame. Got mortgages. Man, oh man, have we been on a fire when it comes to interest rates? Interest rates are the lowest that they have been in quite some time. We are going to dive into what are some of the factors that have really changed from just last week into now. So many different opportunities for lots of our consumers. We've locked approximately 12 to 13 clients just in the last 48 hours when it comes to interest rates. Interest rates have dropped significantly. We are going to go over specifically where they have dropped. You're going to see this, and this is finally something, the moment we have been waiting for, as we start seeing interest rates. 1980 is a little too long. As we start seeing interest rates start to transition down, look at that sharp drop, baby. These are the times that we're obviously looking at, and as you can see here, it is literally in pretty much 6.5. We haven't been at those levels since literally past April and then some, which is awesome to say. We're going to go over and share what are so many different avenues that the clients have obviously been taking advantage of, and what are some of the things that we are able to, of course, make sure we have explained, right? So taking a look at it right here, what happened this past week, interest rates have obviously held steady, right? Inflation has slightly increased, just slightly higher than expectations. Revisions, of course, are obviously telling a lot of different stories, right? The BLS report, Bureau of Labor Statistics, came out and revised almost 250,000 of jobs saying, hey, sorry, we're off. We basically gave a lot more jobs as was expected, which of course came out and showed a lot of different opportunities for clients to now start taking advantage of lower rates, right? Starting from the tops again, we know that the Federal Reserve held interest rates steady, balancing the market this past week, right? It was such a jam-packed week. We had jobs data, we had GDP, we had obviously updates when it comes to what the Fed's market was. Man, if this number for employment came out right before, I guarantee you the Fed would have changed their stance and actually cut on their interest rates. But I think now there's a higher likelihood of there being some potential changes when we take a look at interest rates, obviously really transitioning, right? Fed, jobs, and inflation. Of course, the economy bounced back in quarter two, 3% growth with a slight dip in Q1, which we're going to go over. Housing activity, of course, has slowed down. Labor market indicators, once again, showing that thing. I mentioned DDP report, right? The U.S. economy rebounded in Q2. 3% growth after a 0.5% drop in Q1. Of course, helping, obviously, a few different imports and housing market activity. Really some of the things that we want to take a look at. Now, as you guys can see here, I just shared this earlier, interest rates have taken a huge dip from that 6.7, dropping by literally over quarter of a point and diving even further down. What did the Fed do, right? They held interest rates steady. We know that they did not change their federal funds rate. We are stuck at the 4.25 to 4.5% on the Fed change, completely unchanged since January, right? We know last year, September, October, and December, they decided to cut their federal funds rate 3 times. I don't think that if we see another potential federal rate cut, we're going to see interest rates move up. I think we're finally meeting that quote where at one point when the Fed cut in September, unemployment was still out there. Obviously, this is the moment that we have been slowly waiting for, right? Interest rates tend to drop, more opportunities for us to start seeing more refinances, more advantages for our clients to obviously start seeing. My team has been doing an analysis Friday and Monday. I mean, we've literally seen clients save anywhere from $350 to as high as $600 a month when we're doing refinances for them and rolling in all the potential closing costs as well with nothing upfront. Inflation on the PCE, personal consumption expenditure report, did come in just slightly higher, which is expected, right, at 0.3%. And then, of course, on the core, if we strip all that stuff, we're still at the 2.8% mark when it comes to, right? We want to hit that 2% mark. Here's the reality, and this is where I really wanted to kind of slow down when we talk about job openings. Again, when we talk about the BLS report, where job actually only showed 73,000 jobs, right? Which was almost 47,000 less jobs that they were expecting, right? A huge drop was obviously on government employee. Unemployment rate went from 4.1 to 4.2%. Remember, the higher the rate, the higher chance, meaning people are getting let go. This is not the curve that we want to be in terms of the Fed. Therefore, they have no choice but to cut potentially their federal funds rate, which hopefully they'll be able to do that in September. We'll see. Again, the real story again, May was cut from 144,000 to 19,000 jobs, right? And then June was cut from 147 to 14,000. I mean, you were literally off by 258,000 jobs, which is complete bull crap when you look at it. as to the reality of where a lot of clients who locked in that time frame of May or June could have really actually gotten lower interest rates than what they did that time. I think obviously July, we'll see a similar pattern, of course, where we'll potentially see some revisions for the prior month. And then, of course, a little bit of a slowdown, right? Private sector did come in a little bit higher, adding 147,000 jobs, right? That's the ADP report. Normally, the ADP, if you remember the prior job, actually showed revisions of losses of 34,000. This one showed a little bit of a slight uptick, which was a little difficult for us to obviously absorb. GDP, gross domestic product. Once again, this is what we use in order to monitor the economy. Grew by 3% again in Q2. Obviously, a drop of 0.5% when we talk about the economy and the growth, right? We know that home price appreciation is still on the rise, really hyper local, depending on the local area and what we anticipate. Of course, some of the seasonalities, right? When we come, obviously, in our neck of the woods in the Northeast, generally tends to be a little bit more hotter than expected. Right. And then again, guys, this week, not a lot of stuff going on. We're just going to get updates on home price appreciation and jobless claims. Okay. So going back to it, guys, again, we are seeing such a positive gain. You take a look at essentially from the start of the year to where we're at right now, interest rates has consistently been on that downward trend. Hopefully we continue on these positive trends. If you're a consumer out there who is simultaneously still looking to see if it makes sense for you to be able to obviously refinance, make sure you reach out. I'm more than happy to help out. Again, gotmortgages.com. Appreciate you guys tuning in. Talk to you guys soon.